This interview is brought to you by First Majestic Silver Corp., one of the world's purest and fastest growing silver mining companies.
Welcome to Cambridge House Live. I'm Vanessa Collette at the Toronto Resource Investment Conference. I'm joined by David Morgan, founder of the very popular site silverinvestor.com. Welcome, David. Great to have you here with us.
Thank you.
David, why did silver do so well in August?
I don't know, the market knows. But yeah, silver actually outperformed any asset class or any commodity in the month of August. It was up about 19%. I forget the next closest commodity, but it certainly shot off the bottom of 1813 from the June 28th bottom, and July it consolidated, in August it zoomed up again about 20%. Why, we don't know. Usually get a bottom for gold in August and usually silver as well, but silver took off a bit early this year.
Do you think that these gains can hold at these levels?
Well, as we all know, all markets go up and down. But I think, yeah, silver, I think will maybe get into the 20s again, possibly. I think 20 would be an absolute low. I don't think it's going that low. I'm looking for support around the 22 level, but again, perhaps into the 20 range is again a possibility. I don't think we're going to see below 20. So overall, yes, the gains will hold from the low, the recent low, and I think we are going to see higher prices by the end of the year.
Now, interest rates in the US are starting to rise. Why is that important for investors to pay attention to?
Well, there's this belief that as interest rates rise, it's negative to gold prices. And that's true if and only if the interest rate is greater than the real inflation rate. So if the real inflation rate is, let's say, 9%, which would be a number that you could get from John Williams, and the interest rate's below that, the real rate of return is negative. So that's a negative interest rate, even though they're rising. So until it crosses over where you're getting like a 10, 11, or 12%, where you get a real rate, meaning a 12% rate minus the inflation rate of 9, so it's a true rate of 3%, I don't think you have that much to worry about. So we saw that in the previous bull market where interest rates rose and gold continued to rise. This idea that as soon as interest rates rise, it's going to kill the gold market is a fallacy. That's not to say that another increase in interest rate might not knock the gold market down for a day or two or a week or two, but in a long-term trend, no, it will not have that big an effect on gold unless you get a real rate of return in the interest rate market.
Where do you think inflation is right now? Do you think the numbers coming out are showing the real representation of where inflation is?
I think it's really tough, even though I'm a big fan of John Williams and his work, and I think his numbers are pretty accurate because he uses the CPI data before it was altered. I think there's some deflation and inflation at the same time. As an Austrian, I have to be consistent and say an increase in the money supply is inflation. But yet, if you look at asset prices, housing prices have come down, of course, and that could be considered deflationary. I think from the big picture that the true inflation rate, the big MAC index, if you will, is higher, much higher than what's stated by the governments. But nonetheless, there are countervailing forces in the economy. So I think it's kind of tough to say, oh, it's absolutely this or absolutely that. Overall, it's much greater than what the statistics are given by the Ministry of Propaganda. But it's not, again, something you can hang your hat on. It's not an easy number, in other words.
Well, we talked about how interest rates are affecting gold. Is it the same for silver?
Somewhat. I mean, there's a correlation between silver and gold of about 85%, so what's good for gold is good for silver, and pretty much vice versa. Silver does have the industrial component, about 50% or greater of the market, so it is a little more susceptible to how the global economy is faring, more than just a monetary asset, because it does have both aspects. So yeah, it has a correlation, but not as much. If there's a huge booming economy, let's just go to the other side and say, interest rates are stable, currencies are stable, the world's just a beautiful, happy place to live, everybody's wonderful, peace breaks out everywhere. Silver market would probably do very well because there'd be more robust economy, everyone would be able to afford an iPhone, so there'd be more silver demand on that aspect. So it's countervailing, it has that monetary side and the industrial side.
A lot of people are saying that in July we saw the bottom for silver and perhaps gold as well. Do you agree with that?
I did. My whole lecture here at Cambridge House was that the bottom is in for the silver market and the gold market. I don't mean the bottom, which was in 2000 for gold and 2003 for silver. I mean the intermediate term bottom. 1813 on the 28th of June, I'm saying that's the bottom on this intermediate term basis. I forget the exact number on gold, it was 1187, I believe, something along those lines. I think those are the bottoms, yes.
Interesting. I want to touch on something that you've said that I find fascinating. You've said that the lower the price of silver, the shorter time frame it will stay there. So there's less inventory at some of the lower silver prices?
Well, it's not necessarily less inventory, although that's a good way to think of it. I mean, think of any asset. Think of an automobile. You know, if you have trucks that normally sell for $30,000 each, and you have some available for $20,000, those are going to be snapped up very quickly, and then all of a sudden they're gone. So how much silver is available under 20? Very little. Look at the chart. How much is available at 50? Well, probably quite a bit right now. So the idea is that when they hit these spike lows, there's not that much available at that price. The overall quantity of silver hasn't changed. It's not like the inventory changed overnight. What I'm saying is that those trucks that were available at that price are limited because there's a lot of buyers that want it at that price, and yet there's not that much at that price. The price starts being bid up higher, and then you're back to a more equilibrium price.
It's more of a demand-supply factor.
Exactly.
You've also pointed out that silver has been trading at below the price of production. Is it now trading above that?
It depends on the mine. It's individual, case-by-case basis. A round number is silver is about 20 to 22 an ounce for most primary silver miners, and we're in that range right now. So a lot of them are like break even or barely so. Now, if you go to a non-primary silver mine like a BHP or something, they use silver as a credit for their copper, zinc, and lead production. So it's kind of hard because these are kind of accounting games that are legal, that are done, but they use silver as something that they don't consider to be a primary asset class. So from their perspective, the silver price isn't that important.
Right, right. So there's been a lot of talk about the divergence between the actual silver supply and the paper market. Can you talk a little bit about that?
Well, it's true of silver and of gold as well. I mean, basically, most of the price setting mechanism is based on derivatives. And a derivative is a piece of paper that claims the ability to get silver sometime in the future. But most of those contracts, about 1% is actually executed for physical delivery, maybe 2% at best. So 98% of the market is just a fiction, it's a derivative, and that's what controls the price. So obviously, just common sense would tell you, well, there's this fiction that's creating the price. And yet, to be fair, you can go into the market and stand for delivery at those prices from time to time. And so does it have an effect on the reality of what you can buy it for? Yes. And then there's distortions in the market. During the 2008 crisis, the paper price was under 9, but you had to pay 13 in the retail market. But on the exchange, you could literally get it at under 9 for a very brief time frame. Again, going back to the previous question, there wasn't a lot of $9 silver available. It stayed there a very short time.
So you've been a long advocate of having silver in your portfolio. Is there anything about the current situation that makes silver an especially good buy right now?
Well, yeah, anytime you can buy a commodity under the cost of production and have some patience, you're going to win, whether it's sugar or cotton, silver, whatever. What I like about the metals is they're money, they're outside the financial system, there's no counterparty risk, and they store very well, and in a very small space. I mean, silver's too bulky by most people's comparing it to gold, and yeah, compared to gold, it's 60 times, 70 times more bulky. So gold certainly is a very small unit for volume, but just this tabletop made out of silver would probably be in the $80,000 to $100,000 range, or maybe even more than that. So just a laptop computer is a few $1,000s. I mean, an iPhone is $1,000 in silver. So an iPhone costs what, $200, $300? But if it was pure silver, it'd be about 1,000. So, there aren't too many things that are that small, that value. So silver is too bulky relative to gold, but relative to almost anything else, it stores very well. A basketball's volume, a cubic foot of silver is a great deal of wealth.
Great, well, it was great having you here this morning, David. We appreciate it and look forward to having you back again soon.
Thank you very much.
Thank you.